A man's greatest joy is to crush his enemies. To see them fall at his feet, to take what was once theirs and make it his own. Mercy is weakness. Weakness is death.
Yo, lock in, twin. Yo, lock in. Yo, twin, lock in.
Oh, he locked in, huh? That nigga scared. That's his ass.
Oh, weave. Weave. Jab, 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 jab,
Bro, this is hard as fuck.
jab.
Damn.
Yo, don't let Vito do you like this.
Bro, this shit is tiring as fuck. Look at him look like Auntie.
Yo.
That nigga said. 7 seconds later.
Yo.
Cruising up my Jordans and shit.
Them weak ass Jordans, nigga.
This boxing shit for the week, bro.
This boxing
I know.
shit isn't for the weak. That's why Vito weak as fuck.
Right? Any nigga I put money on a parlay that was boxing, I take back every negative thing I said about it.
So this month has truly been a test to my patience and my discipline this month. A lot of trades I had to stay away from because of FOMO, or it just was uncertain. And I think I did pretty well of holding myself back from taking those trades and keep telling myself like, hey, the market will give you a retracement, or the market is just preparing for a better movement up or a better movement down. In this case, we've been buying all month. Gold has been buying pretty much all this month and has been breaking all-time highs constantly every week. Also as well, I think as traders we avoid that this fact that gold is buying up so abruptly. It is very alarming to some people, because remember, gold is something that people invest into because they know that gold is never going anywhere, or silver is never going anywhere, platinum is never going anywhere. It's always going to hold value. It's been holding value for hundreds of years. So now we're at this point where gold is hitting all-time highs constantly at a rapid rate, where somebody like me, I look at this and I'm like, well, if gold is going up so rapidly, what is there to come that we may not know of? What is to come in an economy that we might not know of, but the bigger whales are investing all their money into this, into gold or into some type of commodity or metal? What are we missing? So this is pretty interesting to see that gold is hitting all-time highs so fast. Today we actually had a super spike down, a drop down, and it was pretty aggressive, and it just made me think of that, like, dang, something's going on in the economy, or loading up in the economy that we may not know about. And it is truly, like, I guess you could say, alarming. But we're not here to predict anything. We are here to just react to the market so we can make some money off of it. But it is something you should look into. Like, I would for sure look into it for sure. But yeah, this month I'm going to break down some of my stats and most of all to know that price action and market structure will always play a part in everything you do with trading. So with this being said, the trend that I've been teaching you guys, or learning how to identify a trend, is the biggest thing that is probably going to fail you, because a lot of people they try to pass this part. They don't want to understand this part. They don't want to understand that the trend is what you're chasing. The trade that you're chasing is the trend. The trade that you're trying to get in is a trend, right? So if you don't understand what a trend is, you will not understand what the market is doing. So with this being said, let's break down how to identify a trend, or let's just break down the simplicity of what a trend is: a higher high, a higher low, a higher high, a higher low, a higher high. Now, what I teach you guys is ICC, right? So since I teach you ICC, what is ICC? An indication, a correction, and then a continuation, right? Now, when we look at this, an indication, a correction, a continuation, right? It's a three-step process. Now, watch what I do here. This is your indication, this is your correction, this is your continuation. But you're looking at it just as, oh, I need an indication. Oh, I need a correction. But you're not looking at it as this is a high, this is a higher low, this is a higher high. So if you're trying to trade ICC, if you know an indication and correction already happened and you're looking for a continuation, how come you don't think the same way when it comes, this is a high, this is a higher low, this is a higher high? Basically, what I'm trying to explain is you're chasing this. You're chasing that next push up because you know after price makes a high, it's going to end up making a higher low. After the higher low is made, it's going to push off of that higher high or higher low and then make a higher high. So the stronger you go up in your time frame, so right now we're on a 4-hour time frame, the stronger you go up on your time frame, this will all make sense to you. Now, look here. As you can see, price had made a low, lower high, lower low, lower high. Now, this lower high is actually equal. This is an equal high right here. So since this is an equal high, there's nothing much we can do here. But this also tells us there's sellers here. But this doesn't mean that we sell instantly because price is here. Now, I'm going to break this down. So right now, you see this trade, right? You see this setup, right? This is actually where I made a mistake and I took a loss. Because in my head, I was thinking, oh, sellers are here, so that means they're going to push price down from this level and go back down, because that's what I've seen before. Now, the problem with this is whenever you see price makes a, let's say in this case, a lower high, or in this case, an equal high, this equal high is now telling us, okay, just because I made this equal high, you think that I'm going to just sell off and go back down. That's what I was thinking in my head. But it could have made a higher low and continued higher. Now, I'm going to explain this loss. So as you can see, this is the trade that I took that was a win, which was later on that I'm going to explain. I'm going to go back and I'm going to go to this loss. I want you guys to see this. So as you can see already, I have the reasoning of why I lost. If I would have waited for a lower high, that would have been a confirmation to let me know that price was trying to sell, because here is not enough confirmation because we just hit a resistance level. Of course, price is going to react that way. If price hits a level of support or a level of resistance, of course, it's going to have a little feedback to it. It's going to have a little reaction to it, but that doesn't mean that it's going to sell off from that reaction. It could potentially go back up afterwards, right? So with this being said, I went off of, oh, basic supply, basic demand, basic support, basic resistance, the way that people teach you. Oh, soon as price hits resistance, sell, right? But that's not the case. That didn't work, obviously. And you can see there's a loss right here. I entered a trade here, ended up getting out or taking that loss here. Right? So with all that being said, I ended up taking this loss because I didn't wait for that lower high to be created, nor did I wait for price to be under a level of previous a previous low. So even if I wanted to sell, it would be best for me to sell under this level because we already have bearish reactions under that level. See, there's a lot of things about price action that people skip over. They think that I'm just trading break and retest, or I'm just trading supply and demand, or some type of ICT, or whatever the case might be. But I'm just honestly explaining price action in the best and most simplest way as possible for you. There's a lot of things that people avoid and don't take note of, which is why, they're always trading, or they're always trying to find some type of trader. They don't understand the trend because they're chasing and they're looking for the wrong things. Everything is not a setup. Everything is not a sign for you to get into a trade, right? And this is prime example, right? I could have waited and seen that, oh, price was making a higher low. I could have entered off this higher low and catch this whole move. Because once this higher low is established, I know, okay, if price is making a higher low, boom, then it's going to look for that higher high. Remember, I, C, C, right? Higher high, higher low, higher high. So I should have waited for that, but you can't predict the market. You're not going to know what it's going to do. I took this trade on a Friday afternoon. I could have waited till Monday and then I would have been able to, or I could have waited for Sunday opening. And look, price ended up making a higher high, pushing off of that and having that momentum. I'm going to post a video for later on this video. This is going to be a pretty long educational video. I'm going to post 2 Zooms from a previous Discord call. If you're watching this far, I will be live streaming on YouTube as well. So I'll start doing that often just so I can help you guys. But just so you can see here, market structure and price action will not lie. As you can see, lower high, lower low, lower high, and then price ended up making a higher low. This higher low is prime example of why we should not be getting into that sell. And then I ended up taking that loss. So let's go back. Let's break down this trade. Go back to the 4-hour. Maybe I should go back to this one. There we go. And by the way, it's all positions. They do it based off positions. So as you can see, it's just one position. So I placed 4 positions in this day. If that helps you out. So we're going to go back to a 4-hour. Boom. Where are we? Here we go. So as you can see, we ended up making those highs, right? So we have a new high in the market. Price makes a new high. There's a correction. Remember, indication, correction, continuation. Now, in this case, most people say they struggle with finding when the correction is over. Now, you have to remember higher high, higher low, higher high. Stop thinking of it just indication, correction, continuation. That's the way you're going to learn how to find the price action, but don't make that solely what you think about all the time. So in this case, as you can see, we have a high, higher low. So now we're looking for a price to create another higher high since it already showed us it doesn't want to go any lower. What we're going to do from here is we're going to go from this 4-hour time frame to the 1-hour time frame. I just want to break something down to you guys, right? So let's go back. Matter of fact, let's go back. So higher high, higher low, right? Boom. And then let's go back to the 1-hour time frame. So as you can see here, 1-hour time frame, this is the 4-hour looks like this. There's candles going up in green, candles going up in red. This is what the 1-hour looks like inside of that 4-hour. So the blue line is the 4-hour time frame. And obviously we're on the 1-hour time frame. Look at this. High, low, lower high, lower low, lower high, equal low, doesn't go higher. So that's another lower high. Doesn't, and then it starts consolidating here. So it starts breaking structure, makes a higher low, but fails to go higher. Boom, ends up breaking lower. Then we start stagnant here. And then boom, what happens? We make a high, higher low, higher high, higher low. Price respects that it has a higher low, and then it pushes off of this, right? There's some stagnant before the market opens, but then boom, we get that pop, right? All this was respecting the fact that it had a higher low, right? So with this being said, looking at this, does this not make sense to you? All I did was go to the 4-hour time frame. I seen that price was correcting. I didn't know the correction was over. All I did was go to the 1-hour and just scope price and wait for price to build back up. Now, why did I do it and why didn't I look for buy or why didn't I look for sells? So look at this. We go back to the 4-hour time frame. We can see that the last level that we had to sell from, or the last level of buyers, strong buyers, was here, right? So price could correct all the way back down to here before the trend turns bearish, right? It can correct all the way back down to there if it wanted to, but it didn't do that, right? It came here, stopped here, and showed us that it was ready to build back up. That's what you're missing. You have to understand, even now, what I'm going to show later on of what price is previously doing. Looking at price now, you should be able to tell that, okay, there's a high, there's a low, there's a high. The higher low shouldn't be anywhere lower than this level, right? It can go all the way back down to this level if it wanted to, I'm gonna remove this box. It can go all the way back down to this level if it wanted to, and it still would not be bearish, right? The chances of that in this moment, now that we've seen it, are pretty slim. But as you can see, price did not do that. So back to that 1 hour example, we had that high, higher low. Looking at the 1 hour, we can see a shift change. All we're looking for is price to start building that higher high and higher low again on the 1 hour time frame, right? And we can enter based off that. I enter here because price made another higher low. I have my stop loss below here and made sure that, hey, if price was to break this level, then I know price is going back on that downtrend, right? But price ended up giving that build up, and then we ended up closing once price hit all-time highs. And then the market, I'm pretty sure the market closed, and I, just took my trade for what it was. Matter of fact, no, this wasn't market close. We held over the weekend. Sunday open, it popped all the way up, and then I ended up closing, right? And then later on, we got some more push, but I wasn't too much worried about that part, right? So that was that trade. Let's go back. And let's go to, so that was the 11th. Let's go to the 23rd. So we are here on the 23rd, and this is the trade that I took for the 23rd. So as you can see here, for the 23rd, we pretty much have the same thing with the higher low situation. So price ended up making a high, ended up causing a higher low. And then on this higher high starting to be created, I ended up taking the trade. So now let's break this down. Matter of fact, this one is going to be broken down on the 15-minute time frame. Let's go back. This one, I was a bit late than I wanted to, but I trusted in the higher time frame to pull up that through. So as you can see here, that high was made. So once again, let's go back to the 4 hour. High, higher low, higher high, or being created. So boom, 15-minute time frame. We can see on the 4 hour, remember, this is just going down. So this is our correction, right? Level, this is a level where price made its highest point. Actually here, low, here, price ended up making another lower high here, and then we'll start from here, right? So lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, fails to make a low, lower high again, fails to go lower again, and then we have a break and price starts to push, right? So this break here was already signs that price was getting ready to build. So from here, we ended up having a high, a higher low, price fails to go higher, and I'm pretty sure this is only because there was no volume in the market, tries to go lower, fails to go lower, and then we ended up making that push before the session started. So then we have a new high in the market, which then we trade this off of the volume. So all of this right here is New York volume. I'm pretty sure we go here, type in volume. Let's see, or let's type in sessions actually, because I think volume is going to be something different. Sessions, and we go here because we only want New York sessions. Pretty sure that's how I do it. Oh, here it goes right here. Boom. New York session. As you can see, all of this was a New York session. So New York open right around, this is 7, 8, 9 o'clock right here. So New York opens right around here. As you can see, the volume starts to kick in, price starts to make that push. It ends up breaking above this level, and that's our indication. Price ends up corrects under this level, and then we're back above here. So if you want to use it that way, you can. But no need to do all that because price ended up making that higher low. And then once it made the higher low, it ended up making that higher high. So higher low was made, higher high, right? Price ended up respecting the fact that the supports are getting higher, the buyers are getting stronger, buyers are getting stronger. Price respected that on the 15-minute, as you can already see. Price came down, respected it. Oops. Respected it, and then the market opened. Even if you got confused, price broke above this high, gave you an indication, small correction, retest, whatever you want to call it, and then ended up pushing for more. So another higher low before price used that momentum. With all this being said, that is how I got into that trade for, January 23rd. And then we ended up closing all the way up here for right around $2 million. Yeah, $2 million, and then 2.8 on the other one. And then last but not least, the trade that I took on the 28th, We're going to go here. Go to the 4-hour time frame. And boom. So this trade again, once again, using the same higher high, higher low thing. Boom, we're going to go to the 15 because it looks better on the 15 to explain. So this one was another higher low trade. Matter of fact, we might have to go to the 4-hour. So the 4-hour has been constantly doing higher high, higher low, higher high, higher low, higher high, higher low. So now price ended up making another equal high and then pulling back a small bit just so it can push up higher, right? I also am going to put a zoom of me telling everybody what I was expecting price to do. If price was either going to go lower, it would have been sales if it would have went lower. And then if it would have made a higher high, it was going to push up. So that video will be coming up after this as well. So you can see here, price ends up hitting an equal high, hits this equal high, pushes down from here. Once it pushes down from here, you can see also as well, price is in a no trade zone. Pushes up from here. So this trade is another higher low example on the higher time frame. So the 4-hour has already made it all-time high, corrected, used this level of support to come off of. So bought off this level of support, ended up coming into another zone. So now price is having an equal high. So that's going to explain once again the first time. You see how the first time I took this loss, remember, it came into a resistance and then I sold. Look at now, right? I learned from my lesson before quickly. So I'm not making the same mistake. This time it came into this level. I said, hey, it's not bearish until it breaks below here because that's where buyers are at, right? I knew that price could make a higher low here and potentially go higher. So this is the aftermath of my lesson from the first time. So the first trade I took, I learned that lesson. Boom. Price ends up selling, makes a higher low. So now it's respecting. Since it made that higher low, I already know if price makes that higher low, it's going to try to go for that higher high. So I ended up taking that trade and waiting for price to push above here because remember, if price makes a high and price makes a higher low, it's looking to go higher. It's looking to make that higher high. And I'm gonna live by that on the higher time frame. So that's how I've been able to basically get into the trades that I've been getting into for the past couple of days. You've seen me trade, so pretty much 3 or 4 trades. I've been using the same way of ICC. Just, I guess you can call this the more advanced version of it. But this is just not sugarcoating it. ICC is to teach beginners, but this is the non-sugar-coated, straight, real deal price action. This is how you learn, right? Price makes a high, higher low, higher high. We look for that higher line. Once we get in, we can go into the 15. I can explain it from here, 15-minute time frame. As you can see, price was building that small little downtrend. So boom, downtrend, 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 and then it switches. Once it switched, I knew the trade. This is where I get into that buy. Higher low is made, boom, higher high. So all this being said, everything is down to price action. Structure will always, always be anything that you think. You think you know something? No. No, 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 no. You feel like you know something? No, 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 no. The market is going to show you. The market is going to show you what it thinks and what it knows. So with all this being said, I hope that this small video was very, very, or I guess you could say very extensive and long video, was very informative. All right, so here are my stats for pretty much the month of January. P&L, $6.2 million. As you can see, winning trades, 13, losses, 2 trades. So they're counting it per position, so per lot that I put down. So if I do 350 lots, that counts as 3 trades. So technically this is like 3 setups, 4 setups, right? Average loss, 181,000. Average win per trade, so it's going to be 500,000. Average time holding trade is going to be 1 day, 12 hours, and 40 minutes. That's how long I've pretty much hold most of my trades. Winning trades pretty much around the same. Losing trade was 2 days, 6 hours, 53 minutes. Average P&L per position is 207,000. Our profit factor is 18.2. And then we have, let's see, what other ones matter. Average realized So this is pretty much average RR per trade. So 13.54 risk to reward. Max drawdown has been 362,000. Average, oh yeah, max drawdown average is right around 358,000. And then let's see, what else am I missing? Largest day, you seen that one, largest profitable day. Yeah, pretty much that is, yeah, all of my trades. And that is all my stats for the month of January. So with this being said, I hope you enjoyed the video. And yeah.